Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be Tuesday, the 19th of August, 2025. So, as usual, before we kickstart our daily dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick recap what has taken shape yesterday in terms of the intraday movement on those broad-based cross asset classes ranging from the FX market, the major stock indices, and the two key commodities, which is gold XAU/USD and West Texas crude oil, and as well as any relevant economic news data release that has taken shape over last night and early today's Asia session before the start of our daily dose at 11 a.m. Singapore time. So yesterday's key focus is the meeting between US President Trump, Ukraine President Zelensky, and as well as several key European leaders over the potential fate of this ceasefire between this 3-year plus of Russia-Ukraine conflict or war over here. So yesterday there was some signs of promising after the meetup with European leaders and Ukraine President Zelensky with US President Trump, stating that there's potentially a three-way meeting coming up where Trump is making arrangement for Putin to meet with Zelensky, and after that, Trump will say that US will also coordinate with Europe on Ukraine security. And there was actually a media report by this Interfax saying that after Trump met up with Ukraine President Zelensky and as well as several key European leaders, Putin and Trump spoke alone, over the phone for about 40 minutes to convey what Zelensky's stance will be to Putin. So and also there's a FT report, Financial Times report, saying that Ukraine offers 100 billions of weapons deal to Trump to win securities guarantees. And this 100 billion weapons deal is more related to those drone warfare that Ukraine kind of developed during this 3-year plus of conflict with Russia over here. So this is the minute. Okay, so Ukraine will promise to buy 100 billion of American weapons financed by European in a bid to obtain US guarantees for its security after a peace settlement with Russia. All right, so and also under the proposal, Kyiv and Washington will also strike a 50 billion deal to produce drones with Ukraine companies that have pioneered the technology since Russia's full-scale invasion in 2022. 2022 over here. So it seems that there are some promising, we call it signs that we may be coming very close to a potential ceasefire deal, given the kind of snippets that I share with you guys what has transpired yesterday between the meetup between Ukraine president, European leaders, and US President Trump. And that being said, the asset that is being impacted more directly will be the West Texas crude oil, given the fact that once there's a potential ceasefire deal that's being inked out with Russia and Ukraine, US may push for lesser sanction on Russia. That means, i.e., potential Russia oils could start to flow into the market much more freely over here as per se, and that could increase global oil supply, which potentially create a negative feedback loop into oil prices. So as we are speaking, oil prices right now, based on this daily chart, is down by negative 0.34% over here. So if you look at the, a minute. Okay, so if you look at the daily chart, it's been rather lackluster, trading below the 20-day moving average. Yes, yesterday was a slight bounce of 0.36%, but that is still showing no signs of a potential medium-term bottoming scenario over here, given that after that tremendous bearish reversal that was seen on the 23rd of June, exposed Iran-Israel conflict, oil prices has been trading in a softer tone. Okay, so later I'll share with you what are the intraday technical outlook to look out for. Then over to the US stock market, is rather muted session again. So I would say it's more of a price consolidation yesterday, where all the major US indices, three of them closed almost unchanged. The SPX negative 0.04%, the Nasdaq positive 0.01%, the Dow Jones negative 0.08%, and the one that managed to ink out a slight minor gain is the Russell 2000 positive 0.35%, and that is primary reason due to a potential narrative that the Fed may potentially pivot in September. That could be create a headwind for those small cap company that kind of rely on financing to actually maintain their business operations over here. And also over to the FX market, we also start to see a rather mixed bag as well, a sideways movement, where the 5-day rolling performance of the US dollar against other major currency, as we are speaking right now, has started to turn flat in the 5-day rolling performance basis. And what's interesting over here is that if we were to look at from a 1-day rolling performance, that means taking into the account of the last 24 hours is rolling, very clearly it's just trading sideways right now. All right, so the one that is now the dollar is the weakest against the Kiwi, which is down by negative 0.09%. All right, and it's not that much as well, so it's just more of a sideways tight consolidation holding pattern in the FX market. So this also can be very clearly seen on the price action of the US dollar. So the price action of the US dollar has started to trade in a sideways range since last Thursday. So in today's Asia session, yes, there was attempt to an early bounce, but this bounce on the US dollar seems to be get a bit of a rejection at the 20-day moving average, which was also the last Thursday intraday high over here, which was 98.17. So it's more of a sideways movement of the US dollar. Potentially this holding pattern could continue until we start to have this risk event that is taking shape on this Friday 8 p.m., which is Fed Chair Powell speech on this annual Jackson Hole Symposium, where he may lay ground for a potential Fed dovish pivot upcoming in September. All right, so that one more particular news flow I'll share you guys is more pertaining to the Australia economy. So in today's early Asia session at this 8:30 a.m. Singapore time over here, the Westpac Consumer Confidence Index actually increased to a high that is not seen since February 2022. So that's close to about what, a 3.5 year high. So the Australia Westpac Melbourne Institute Consumer Sentiment Index surged to 5.7% in August to 98.5. This is the highest level since February 2022. So what I could see over here is that it has been in a strong uptick since April over here. After there's this minor dip for March to April. So it seems to us that this ongoing interest rate cut by a slower pace by RBA is slowly having this positive impact on Australia consumer sentiment. So that means, i.e., the Australia Central Bank (RBA) in the coming next few meetings may not be as dovish as they want to be, given the fact that several this consumer confidence in Australia has starts to actually pick up over here, which potentially could start to see a positive feedback look into the Australia economy. All right, so with that, that sum up the first segment of today's Daily Dose. Now let us move on to the second segment, which is the intraday technical outlook segment. All right, so let me expand my screen. All right, starting with the FX market first. Okay, let's start with the euro dollar. So the euro dollar yesterday did a minor pullback, but this minor pullback managed to found support right again at the 20-day moving average, and now also the 50-day moving average as well, confluencing with the 1.1630 short-term pivotal support level. And what's interesting is that we start to see a minor lower low that's being formed in today's Asia session as we're speaking right now, but the RSI has starts to, the RSI has starts to print out a higher low, right? we could see over here after hitting the oversold level during yesterday's US session. So given this bullish divergence that's being formed right now on the hourly RSI, indicating that the slide that was being seen yesterday during the start of the late European session all the way down to US session, the downside momentum has started to get negated, and potentially there could be some form of a minor bullish reversal taking shape right at the 116.30 short-term pivotal support. So with that, for today, we will still have that bullish bias for this potential minor bullish reversal to take shape. First resistance level it got to surpass will be 116.80. A breakout above 116.80 may revisit last Wednesday intraday high or minor swing high at 117.30. Only a bearish breakdown below 116.30 will invalidate today's bearish bias view. Pardon me, a bit of tongue twisting. Only a breakdown below 116.30 will invalidate today's bullish bias view on the euro dollar to extend this minor corrective decline further to the downside, exposing the next near-term support level at 115.90 next. Next up will be the sterling pound over here. So the sterling pound also did that pullback during the start of yesterday US session all the way down to the Asia session today, and starts to actually form some form of stalling at the 134.95 short-term pivotal support level that we highlighted yesterday, and also the 50-day moving average as well, confluencing at this similar level. So no change, still watching out using the 134.95 as my short-term pivotal support level on the sterling dollar to maintain a potential minor bullish reversal recovery today view on the sterling dollar. First resistance equal to surpass, consider this as an upside trigger level, will be 135.40. A breakout above 135.40 will see a retest on last Thursday minor swing high area at 135.90/136.10. However, a breakdown below 134.95 that will invalidate today's intraday bullish bias view for that minor bullish reversal recovery scenario to see a deeper extensive corrective decline scenario unfolding, revisiting 134 figure 133.80 next, which confluence with the 20-day moving average. Onwards next will be the Australia dollar. So the Australia dollar continues to trade in this sideways range configuration again, as per se. So with that, let me tighten my sideways range configuration, still holding below the 20 and the 50-day moving average. And what's interesting over here is that upon hitting the oversold level yesterday, and as well as the day on the 14th of August, we now starts to see a higher low that is being formed on the hourly RSI over here, higher low, whereas we start to see price action doing a similar low. All right, so potentially there could be a kind of a test back up to retest the 20 and the 50-day moving average at 65.20, 65.11 level over here. So still no change. We're still looking for a kind of a sideways range configuration for the Aussie dollar to hold for now on the intraday basis, using 65.40 and 64.80 as my upper limit, and 64.80 as my lower limit of this neutrality range bias view for the Aussie dollar for today. Next up will be the dollar yen over here. So the dollar yen today, it actually rallied during the Asia session as well. But after this rally seems to fuzzle out at the 20-day moving average and starts to form a bearish shooting star candlestick on the hourly basis at the 9 a.m. to 10 a.m. Singapore time. And that also right exactly at the 147.85 short-term pivotal resistance that we highlighted yesterday as well. So with that, and very interestingly, the hourly RSI has started to shape a bearish divergence. What we could see over here, we see price action showing similar high on the RSI, on the raw price action of the dollar yen, and however, from yesterday US session to today's early Asia session, but the RSI corresponding in its corresponding time periods has starts to shape a lower high bearish divergence and starts to exit from the overbought level, indicating the lack of upside momentum right exactly at the 20-day moving average and the 147.85 short-term pivotal resistance level that we have on the dollar yen. So the dollar yen continues to be in a very medium term, 3 months only coming to the 4-month right now, sideways range configuration since the ascending range support that is still in place since 22nd, ascending range configuration that still be in place since 22nd of April 2025 low over here. So on a shorter term basis, I'm still looking for a potential push down using 147.85 as my short term pivotal support, using 147.85, pardon me, as my short term pivotal resistance level. First, we support level to watch out for today will be this minor congestion area that is being formed during Friday's US session and the start of the European session yesterday, where it managed to stage a bounce and push up higher to test the 147.85 short-term pivotal resistance level. So this will be at 147.20. So that will be my first support level to watch. 147.20 followed by 146.70, 146.40, which is the 50-day moving average as well. Only a bullish breakout above 147.85 that would invalidate today's intraday bearish buyers view to see a squeeze up towards 148.75 and even the key resistance at 149.50, which confluence very closely with the 200-day moving average. All right, so that's for the FX market. Moving on, next will be the major stock indices, starting with the Hong Kong 33 representing the Hang Seng Index. So the Hong Kong 33 in today's Asia session managed to stage a bounce right exactly at our 25,055 short-term pivotal support that we highlighted yesterday, and also confluence with this rising 20-day moving average, keeping alive the medium-term uptrend, the minor uptrend phase that is still intact since the low of 1st of August. So the RSI also starts to shape a higher low as well over here, which indicate that bullish momentum has starts to creep back into the market. And in fact, this is a bullish divergence, higher low, whereas we start to see a lower low on the raw price action. So giving some signs of bullish momentum creeping back into the Hong Kong 33. So still no change using the key pivotal support level at 25,055. But for today, I will have an upside trigger level, which is yesterday's US session high, 25,285. A clearance above 25,285 will increase the probability of this bullish buyers view to retest 25,545 next on the Hong Kong 33. However, a bearish breakdown below 25,055 will negate this bullish tone to seek out a further slide to expose the next near-term support level at 24,915 and even 24,730. Up next will be the Japan 225 that is representing the Nikkei 225. So the Japan 225 continues to trade within this minor ascending channel since the low of 1st of August over here. Yesterday, we do highlight two key support level to watch. The first support level will be at 43,470, which price action managed to test and stage a bounce in today's Asia session at the 9 a.m. to 10 p.m. 9 a.m. to 10 a.m. Singapore time mark. So still no change given that it hasn't surpassed above the first resistance level that we highlighted yesterday at 44,050, 44,110. I'll be still using the pivotal support level that we have yesterday, 43,050 as my pivotal support level to maintain that bullish bias unless we have a bullish breakout and an hourly close above 44,110. Then I will tighten my short-term pivotal support to 43,470 next. So for now, level still remains unchanged. Next resistance that maintain that bullish bias. Next resistance level to watch above 45,110 will be 44,840, which confluence with a Fibo extension cluster level as well as the upper limit of this minor ascending channel that is in place since 1st of August. Only a bearish breakdown below 43,050 will invalidate today's intraday bullish bias view to see another round of minor corrective decline sequence taking shape to revisit the former all-time high area at 42,513, 42,460. That's for the Japan 225. Up next will be the Germany 30 representing the German DAX. So the Germany 30 managed to do a minor pullback, but this minor pullback managed to find a bounce right exactly at the 20-day moving average and the 24,155 short-term pivotal support that we highlighted yesterday that maintain our bullish bias for this ongoing minor uptrend phase that is still intact since 1st of August 2025 low. So with that, level still remains unchanged. Short-term pivotal support will be this key support level over here, 24,155, to maintain this ongoing minor uptrend phase. First resistance level to watch will be yesterday's European session high at 24,440. A breakout above it may revisit the minor swing high area of 24th of July and 28th of July at 24,560. That got almost rejected on last Friday as well. However, a price action breakdown below 24,155, that would negate today's bullish bias view to see another extension of this minor corrective decline scenario to unfold, to revisit the 50-day moving average, which is so confluence with the minor swing low area of 12th of August at 23,990 next. So that's for the Germany 30. Onward next will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 continues to be in a holding consolidation phase yesterday, but still holding above the pivotal support that we highlighted yesterday. So level still remains unchanged. 44,715 will be my short-term pivotal support to maintain this ongoing bullish bias view on the US Wall Street 30, representing the Dow Jones Industrial Average. Upside trigger level will be 45,100, which is also the intermediate resistance level. That is the former all-time high area that got breached on last Friday before trading downwards on the consolidation phase. Above 45,100 may seek out the next intermediate resistance, which is a Fibo extension cluster level at 45,455/45,520. Only a bearish breakdown below 44,715 that will see the extension of this minor corrective decline to revisit 44,470, 44,420, which is the rising 20-day moving average as well. Next up will be the S&P 500. So the S&P 500 managed to hold at the tighten short-term pivotal support that we have yesterday, 6,440. So still no change given that the short-term pivotal support is holding, and the RSI also now managed to shape a higher low right at the parallel ascending trendline support that I draw from the low of 1st of August. So no change, maintain that bullish bias using 6,440 as my short-term pivotal support level. Upside trigger level for today on the intraday basis, 6,466. Above it may retest last Friday high at 6,490. Only a bearish breakdown below 6,440 will negate the bullish tone to see a further corrective decline slide to expose the next near-term support level at 6,405. Lastly will be the Nasdaq 100. So the Nasdaq 100 also continues to be in a holding consolidation phase. And what it starts to see over here is that yesterday it managed to find support level at the first support that we highlighted around this 23,680 level, and it starts to form a bullish flag formation over here, as been depicted by these two downward sloping gray line. And also the hourly RSI has starts to also manage to bounce off and form a higher low right now from this parallel ascending trend line taken from the low of 1st of August, indicating some form of bullish momentum that is coming back into the Nasdaq 100. So no change, 23,560. That is my short-term pivotal support that we have yesterday, remains the same for today. What we have today will be the potential upside trigger level, which is the upper limit of this minor bullish flag formation that is forming on the Nasdaq 100, which is at 23,800. A breakout above 23,800 will potentially satisfy the minor bullish flag bullish breakout scenario to take us up potentially higher for the next intermediate resistance to come in at 24,020, which is a Fibo extension cluster level. Only a bearish breakdown below 23,560 will invalidate today's bullish bias view to see the extension of this minor corrective decline unfolding to lower levels, exposing the next near-term support level at this 23,295. I think it will also be close to the 20-day moving average as well. It should be a zone over here. Give me a minute. Sorry about that. Let me put it in writing. Okay, 23,415/23,295, which is the rising 20-day moving average. Right, so that will be the next support level to watch. If the 23,560 short-term pivotal support is broken down to the downside. All right. Now, next up will be the commodities market, starting with gold XAU/USD. So no change for gold as it continues to trade in our sideways neutrality zone that we have yesterday. So still maintain a neutrality stance between 3,359, 3,324. Only a bullish breakout above 3,359 that would trigger off a minor bullish scenario for it to revisit the upper limit of this medium-term sideways range configuration that has been in place since April 2025 all-time high. So the next level after 3,360 or 3,359 will be 3,383, followed by 3,402, where the bulls got rejected since 8th of August. So that's for gold XAU/USD. Still maintain that neutrality view, sideways view between 3,359 and 3,324, and about watching closely the upper limit of this neutrality range, which is 3,359. Next up will be the West Texas crude oil. So on the West Texas crude oil on an intraday basis, price action remains weak. So yesterday there was a push down during the start of the US session to test our first support level at 62.50 before staging a bounce, and that bounce got rejected right exactly at our short-term pivotal resistance that we have yesterday as well at 63.85/64.18, which also now is the upper limit of this ongoing minor descending channel that is forming since 31st of July 2025 high of 71.33. So still no change given that price action still remains lackluster on the West Texas crude oil as it continues to evolve within this minor descending channel. Pivotal resistance for sure will be at 63.85/64.18 on a short-term basis. A bearish breakdown below 62.50 open up scopes for much more potential weakness to revisit the 2nd of June 2025 gap up at 61.30 level in first step. Only a bullish breakout above 64.18 that would invalidate today's bearish bias view to see a squeeze up towards 64.85 followed by 65.60, which is confluencing very closely to the downward sloping 20-day moving average. All right, so that sum up the intraday technical outlook on West Texas crude oil and as well as all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So for today, during the European session, will be rather quiet. So for those who have interest in the dollar CAD and the CAD crosses, we'll have a Canada core inflation rate that is out at 8:30 p.m. Singapore time. All right, then during the US session will be rather quiet as well. And before we kickstart tomorrow Asia session, which is Wednesday, 20th of August at 7:50 a.m., we have the Japan exports and imports, which is the balance of trade that could influence the dollar yen, the yen crosses, and the Nikkei 225. And we have 9:15 a.m. China 1-year and 5-year loan prime rate. So that potentially would remain unchanged at 3% and 3.5%. And follow that will be at 10 a.m. for those who have interest in the dollar, the Kiwi dollar and the Kiwi cross rates, which is the New Zealand Central Bank RBNZ interest rate decision. So market has been almost fully priced in 25 basis point cut by RBNZ to bring it down to 3% from 3.25%. Right, so that sum up today's daily dose of market insights. I'm Kelvin here, signing off. I wish you all a great day ahead and we shall speak again tomorrow. Thank you.